Our topic for this presentation is national income. Now, this will help those who would have missed our last Zoom session. So, please review the following to get some understanding on this concept. So, when you hear the term national income, of course, I know money comes to mind, and the term national kind of give you a sense that we're dealing with the economy or an economy. So we are going to be looking at the concept national income and what it entails. Of course, we're going to be using our own local economy of Grenada to explain this concept. So, question: how well do you think the Grenadian economy is performing today? Do you think that we're operating at full capacity? Do you think that the country has resources that are idle and not productively utilized? Do you think that the country's productive capacity and actual production are growing? And do you think production is growing for this country at a faster rate than the population? Now, these are a few questions that you can think of, and the way you respond will also highlight some important aspects that relate to national income, a nation's economy. So, just like how private businesses will keep records of their financial transaction, the same way a country keeps records of the economy and its performance. So government has the necessary departments, right, in finance that will maintain accounting records. And a key aspect of these records is our national income. Now, in order for policymakers and governments to be able to know how well the economy is growing and to be able to know whether the economy has a good, healthy, progressing status, it is important to get income for a year or the total income earned by a country from producing goods and services within that year, of course, after removing any depreciation. Another way of defining national income is the measure of the level of economic activity of a country within a year, meaning the wealth that has been created within that economy will be measured, and that will give you a figure called national income. National income is also defined as total money value of goods and services produced by a country over a year. So, what picture have been painted here? For a country at a given financial year, earnings from the various factors of production. So, we remember we concluded that there are four main factors of production, which is land, labor, entrepreneurship, and then we have, of course, entrepreneurship meaning the enterprise, and then we have capital. So these four factors of production all generate income. Land generates the income of rent, labor generates the income of wages, capital generates the income of profit from being invested, and the enterprise also generates profit from its investment. See or view national income, and one of this is known as GDP. We also have GNP, NNP, and per capita income. These are all variations of national income, which is measured to produce this figure of total income. So let us now look at what each of these variants mean, starting with GDP. GDP stands for gross product, which is the total money value of all goods and services produced locally, hence the word domestic. So we are looking at production that takes place within a country locally for that 1 year period. Now, GDP does not include any businesses abroad that are owned by locals or government, and this is possible in some cases. So it only includes the money value of all the production for locally operating businesses within that country. And this is what we call GDP, which is basically a reflection of national income. Our second, or before we the GDP from 1984 to 2016, and we can see a trend here. So GDP is basically rising throughout the years, right? With slight fluctuations, but we see an upward moving trend. GDP in the more recent times, GDP was recorded for Grenada in 2019 as 1.20 billion US dollars. So this is how GDP is reflected on the national income accounting records of Grenada. This is another illustration showing GDP for Grenada, and for the coming years from 2010 estimated right up to 2025. So they are projecting that there will be an upward or increase in GDP, which is expected to reach 9,900 billion US dollars. We also have a comparison here of GDP compared Grenada and St. Vincent and the Grenadines. So we see the difference here. The blue bars represent Grenada and dotted lines represent St. Vincent and the Grenadines. So we see here that there are slight variations but very similar patterns in the GDP growth rates over the years that are reflected here. We also have some figures representing from 2015 to 2018. And as you look at these figures, you can see that in some years we have a growth, right? So like in 2017, there's a 1.32% increase from 2016. But for other years, we've noticed that there has been a decline in GDP, right? So between 2014 and 2015, there was a 0.9% decline from the last GDP rate. So this is how GDP will be reflected in the records of an economy to show the growth, right, within that country. According to the Prime Minister, he has also predicted that growth is estimated to be 3.2% in real terms. Now, that was, of course, before the pandemic situation, so this figure may not happen in real terms since many aspects of the economy has changed in relation to production. So, GDP may not register a growth as was predicted. He also mentioned many of the sectors that are responsible for the growth of GDP. In particular, GDP in 2019, that growth. So, tourism, education, and transport sectors are known to be key players, including wholesale, retail, and trade. Now, another way of reflecting GDP is GNP. Now, GNP is GDP, but now you are including firms that are abroad that are owned by locals. So, GDP, including overseas earnings by nationals, right, who have foreign assets that are owned by locals but they're in foreign countries. This is now added to the GDP and you get gross national product, right? So, this is an extension to the GDP formula. Then we have net national product. Now we see again a similar national product, and now we have net national product. Now usually when you see the labels net and gross, it reflects that there is some deduction that is made to come up with the net. So gross national product minus depreciation gives you your net national product. So depreciation is deducted from the gross national product figure, and that will give you a final figure of net national product. Right? Our next variant of national income is per capita income. Now, this is also used by many countries to reflect their national income. And it is also useful because you can also use this figure to give you an idea of the standard of living in that country. So the figure for GDP or GNP will be utilized, or any of the national income figures will be utilized, and then it will be divided by the total population of that country. So if for instance GNP is 40 million and population is 5,000, this figure is divided by 5,000 and you will get 8,000. So GNP per capita, right? Generally, it's an increasing trend. So it means that the population of Grenada citizens are exposed to added goods and services than they were in the past, right? So how do they actually calculate these figures? Now there are three ways that you can measure national income. And the first method is called the output method or the product method. Now, just as the name says, You're basically using the output from every business or industry and adding that figure to come up with your national income. So, for instance, if you have a food processing industry or a factory, you would use the figure from that firm or industry to include in your calculation. And the same applies to every other industry and every other firm that produces. Now, what is complex about this method is that because businesses are linked, you have to be careful to not add the total amount earned by the factors, which is wages and salaries, profit, rent, and interest. So these four incomes are summed up and gives you national income. And a very easy way countries use this method or calculate this is by using the income tax return figures, since every business who is eligible is supposed to return the income tax figures. So this represents the income, right? From the records that they would provide, you would get the income for every industry that is eligible. And then they would collect any other information about that income that is necessary for that method. And then we have the expenditure for the coming years from 2010 estimated right up to 2025. So they are projecting that there will be an upward or increase in GDP, which is expected to reach 9,900 billion US dollars. We also have a comparison here of GDP compared. Grenada wants to increase their national income, meaning produce more goods and services so that more income will be earned as a country. What factors are to be considered? Of course, we have to look at natural resources available. If natural resources are not available or not fully utilized, then national income would be affected, meaning production will be affected, therefore, national income will be affected. The labor force. If production is to be high, which would contribute to a higher national income, we therefore need country's labor force to be skilled, healthy, educated, and therefore we must have the available labor to post it in the Google Classroom or in the WhatsApp group for those who are in that group. And please complete all assignments as it relates to the topic. Thank you.